Hello guys, welcome to this new video on the upcoming IPO of the big name PAYTM. I think everybody is keeping an eye on this IPO, and I just had a look at the prospectus which they filed with SEBI, and I wanted to put across some points which I thought are important for you to know from that prospectus, and then we'll do some analysis of the IPO as well. And lastly, every time how I tell you that what is my view on the upcoming IPO, should you invest or should you not. But big disclaimer, guys, consult your financial advisor before making any financial decision, and this is just for you to be knowledgeable and be aware about the IPO. It is not an advice or a financial advice to you. So do your own research and talk to your own financial advisors, and post that you can make the investments. So firstly, I would want you to know the business model of this company, and what is the whole firm about, and what are they looking into, and what are the future prospects. We need to consider all these factors and then make a knowledgeable decision. So let's go and look at the business model of the company. So firstly, PAYTM has three categories which they have bifurcated themselves. The first one is the payment services. The second one is the commerce and cloud services, and the third one is the financial services. So now what are these and what falls in every category? The payment and services has all these payment wallets which you use, and the consumers and the merchants are part of this. Consumer and merchants, and PAYTM wallet and payments which you make are part of the payment services. So the commerce and cloud services is the ticketing, events, travel tickets, and your electricity bill payments, your movie tickets, all come under commerce and cloud services. And the last one is the financial services. In this, there is payment bank, the PAYTM payment bank. PAYTM is also helping out with insurance, so that also comes under financial services. Then your trading, stock trading comes under this, and your trading broking comes under this. Then your gold investments comes under this. So all these are part of the business model, and these are the various categories which the whole company is bifurcated into. And now let's look at a PDF which I have thought I should put out, and which might be important for you guys, the main points which might be important. So let's go and let's look at the PDF first. So what is the IPO and what are the IPO details? So let's first look at the IPO details. So basically the IPO is going to start on 8th of November, which is Monday. So 8th of November is Monday. IPO is going to start on 8th of November, and the close date will be 10th of November. So from 8th to 10th, you can apply for the IPO. And if you got allotment, you would come to know by 15th of November. And the IPO is going to list on stock exchange on November 18th. and the price band is 2080 to 2150. So 2150 is the higher band, and you can apply in multiples of 6. So one lot is of 6 shares. So if you want to buy one lot, you have to you need capital of 12,900, and the maximum lots you can apply from a demat account is 15 lots, and that is 90 shares. So 15 lots, 90 shares, and the capital needed for that will be 193500. So these are the IPO details. So after this, I would like to tell you the shareholding pattern of the company. And what is the shareholding pattern? That is really important to know. So the the Ant Financial has 29.6% ownership in the company. The SVF India, which is backed, and it is a wholly owned subsidiary of SoftBank, that is 18.3, and the another one which is invested through SoftBank is 1.3. So SoftBank total investment is around 19.6% as of when they applied for the prospectus to SEBI. Then the SAIF, which is now known as the Elevation Capital, they have invested through two companies, and they have around 12.1 plus 5.1, that is 17.2%. Then the MD and CEO of the company, Vijay Shekhar Sharma, has invested 9.6 plus a company in which he is a director. That company has 5%. So Vijay Shekhar Sharma as a whole has 9.6 plus 5, that is 14.6 of ownership. So that is Vijay Shekhar Sharma's. Then Alibaba and Ant Financial are backed by Alibaba. So that is 7.2, another 7.2. And the Berkshire Hathaway of Warren Buffett has 2.8%. So that is how the shareholding pattern of the company looks like. Then what we need to see is the company, how are they going to invest the money which they are going to get from the IPO. So we need to look at how they are going to invest the money which is being taken from the IPO. So let's look at, they are going to raise 18,300 crore IPO, and from this 8,300 crore is fresh issue, meaning new shares are issued, and approximately 10,000 crore is offer for sale. So what is offer for sale? Offer for sale is the existing shareholders which have a shareholding of more than 10%. They are giving their share of shareholding. So they are offering their shareholding. So that is offer for sale. Now we need to look at how the money which is being raised is going to be invested. So 430 crore from the IPO will be used for growing and strengthening the PAYTM ecosystem, and that involves marketing and expanding merchant base in India and deepening partnership with the merchants. And 200 crore will be used for new business initiatives. So new business initiatives, and 200 crores for new business initiatives. So this is what the IPO looks like, how much they're going to raise and what are they looking to invest and where are they looking to invest. That is how the whole IPO will look. Now I think we should do a industry overview as well, and that is really important because Paytm is a company which is uh, being valued based upon its future. So we need to look at the future, the industry overview of the whole space, and then we can judge what is the benefit of this company. So firstly, let's look at the industry overview. Industry overview, and I would just point out some few points which I thought I should put across. So let's do it in a pointers way. So firstly, post COVID-19, India GDP is estimated to grow by CAGR of 9%. So grow GDP 9% CAGR. So right now we are at 2020, the GDP is 2.7 trillion dollars, and 2025 it is estimated to be 4 trillion. So that is about our own nation, what is going to happen. So what favors Paytm is the demographics of the country. Demographics. So the Indian median age in India is 28. USA, China 38, West Europe is 43, and Japan is 48. So we have a young generation in our country, and what would really happen is, because the young generation is tech friendly, and this will help the company. Then third one is rising middle class in India. So the middle class in India will be growing. So right now the middle class is around 55 to 50% of the whole population currently, but it is expected that by 2030 65%. So the users of this company and this technology platform are very much the middle class people. A lot of middle class people are using this platform. So right now we are at 55 to 57%, and then we are looking to grow till 65%, and that is really beneficial for the country. Then fourth is rising consumption. So India will be the third largest consumer by 2030. So India will be the third largest consumer by 2030, and that is a great number. So the growth of the nation will really help this industry and will really help this country as well. So now I think we should head back and look at some pointers which I think are needed to be pointed out. So let's go to the file which I have compiled. So the firstly, let's look at the company timeline. So 2009 Paytm was launched by Vijay Shekhar Sharma. Then the Paytm gateway was started at 2012. Then the wallet in 2014. And then in 2015, the QR codes, the movie ticketing and bill payments were started. So if you look at the payment services, QR codes are part of the payment and services. The commerce and cloud services as movie ticketing, as I told you before. The bill payments as part of the payment services. Then 2016, again cloud services, commerce and cloud services, flight ticketing in 2016 was started. Then 2017, the Paytm Payments Bank, which is part of the financial services, Paytm Gold, Fastag, all these are part of the financial services, and this was launched in 2017. And then the event ticketing was also started in 2017, which is part of the commerce and cloud services. Then Paytm First Games is also part of commerce and cloud services. Then postpaid and then Paytm Money was also launched in 2018. 2019, if you would have heard, when you go to a vendor and merchant vendor, and then you go to a kirana store, and then you are like, you do Paytm, and then there is a voice which comes out, Paytm received for 100 rupees. So that thing which says all of that, that speaker which says all of that, is the Paytm soundbox. It's called the Paytm soundbox, and it was launched in 2019, and it is part of the payment services. Then 2020, there were launch of Paytm services products. Then 2021, the year where they launched the equity trading and the FNO derivatives trading and the credit card insurance, all of that in 2021. So this is the overview of how the company was started and whatever they launched. Now let's look at the overview of the important pointers we need to look at. Firstly, the company is doing revenue of 28 billion from operations. They have 333 million total users, and annual transacting users are 114 out of these. Then they have a very good ecosystem of 21 million merchants, and they have 800k payment devices and 52 billion total deposits. And the main number which I want to emphasize here is the total transactions which happen, which are 7.4 billion. So that is a big number which is happening on this platform. And according to Redseer, Paytm Payment Bank was the largest UPI beneficiary bank in with 17.1%. So that is really good for the firm, for the company. And then now we look at the ecosystem. So they have an ecosystem which is very solid and which in a way supports each other. Those three payment services, commerce and clouds, and financial services, when they are brought together, they are supporting each other, and that is the ecosystem which is the main focus of this company. How they've put out their ecosystem, that is really important to look at. So the more merchants they have on Paytm payment services, more users, more consumers, and then the Paytm payment instruments are more used. So that is really good. And if all of this happens, then there are more users which are going to use for payments such as movie tickets, train tickets, event tickets. So that would be more lifestyle use cases and better customer experience. That is from Paytm services. They would get support of Paytm payment services for the commerce and cloud services, because if I am using Paytm, I would be more likely to book my tickets from Paytm itself. And if I get a good experience, then yes, I would, as a payment, as I'm using it as a payment platform, why not then use it to buy gold? And that comes under financial services. So there are new age financial services products which are there on the platform, and that is being used by a lot of users who are making payments, and then now they are using this. So like a lot of people are going to use Paytm to make IPO investments and to buy stocks. So they have a broking segment as well, and if they get a higher engagement, that will be good for the business. So their ecosystem is also pretty solid. The next thing we need to look at the prospects. So this is the main, because this company is based on the future, and I think they are focusing a lot on the future. So we need to look at their prospects. So the total digital payments value in 2018 was 19.6 trillion US dollars, and in 2021 that is estimated in financial year 2021, that is $20.2 trillion. So that is a CAGR of 1% per year. So that is not big. But now in 2026, it is projected that that number will be 40 to 50 trillion dollars, and that is 17% CAGR growth every year, and that is massive. So that value is growth is massive for the company. And then the total digital payments by value are going to grow for the next 5 years at a CAGR of 30%. So right now it is 43 billion in volume, the digital payments, but it is estimated to be 150 to 200. So the company is banking a lot to capture this number. And India is approximately, because the phones are right now very cheap and people are easily using internet services. So right now the access to total population with internet access is 650 to 700 million of users right now, and that is estimated to be 1 billion. That is estimated to be around 1 billion. So that is a CAGR growth of 8% for the next 5 years. And smartphone users are going to grow from 500 to 800, 10% CAGR growth. And active internet users are also growing. That is 2 times in 5 years. So that is around 16% CAGR growth. So these factors are really the driving force for the company, and I think they are focusing on this future prospects when they are valuing their company. So these were the prospects, and now before we head on to the conclusion, I would like to point out some pros and cons, and for that let's jump on and let's look at some pros and cons. So firstly, let's look at the pros. So firstly, let's look at the pros for the company. So I had put out some pros for the company, and the first pros. First one is solid ecosystem. They have a great ecosystem, which I just showed it to you. Like every service segment is supporting each other. So I think they have a solid ecosystem with massive reach. Then secondly, they have trusted brand. People trust the brand. They have brand loyalty as well. They have loyalty. Then the third one I think is that tech-based company. Tech-friendly app. Sorry, user-friendly app. User-friendly app, which they call the PAYTM Super App. And then the fourth one is the government support. The government is supporting this Make in India, Digital India. Then Skill India. All of these come and are helpful for the company. So these are really beneficial for the company, and the government is looking to support this company in every way possible. Then the products which I like of theirs is that broking segment which they've entered is pretty good for them, because right now the number of active users in the Indian stock market is very low. US have 55% of the population which is part of the stock market, sorry. So they are 55% is part of the stock market. UK has 33%. China has about 13%, and India, like, you'll be shocked to see these are numbers from 2020. At 2020 these were the numbers. India is only 3% right now. So they have entered into this segment, and I think this is very, very good for the business. Then the people also look to hedge to gain a hedge from inflation or the stock market volatility, and they buy gold. So they have digital gold, which is 99.9% pure, and it is hassle free. You can buy it online, and that is digital, so you don't have to keep the solid gold. And people are preferring this because the solid gold takes up space, so people are investing in digital gold. And FY21, the gold segment was around 25 billion in India, and right now it is projected that in year 2026 it will be 41 billion. That is a CAGR growth of 10%. So that is good. Digital gold is good, and all of these segments I think is good. And the last one is increase in smartphone usage. Increase in smartphone users. So that is great for the company. They are banking a lot on this. So I think these are the pros for the company, and you should focus on these pros if you are going to look at investing in the company. Then now let's look at some cons. So the cons which I think should have a focus. So the first one is that big one, that this is a loss making company. So they are a loss making company, and 2021 loss was 1704. Then 2020 loss was 29433, and this is million, so that is a big number. 2019, that is million rupees. These number are in million rupees. The number was 4355. So these numbers are big. Like, you can't even look at their earning per share because the company is not earning anything right now. Second one is cash flow is also not that high. Cash flow is not that high, but they have good investors who've invested in them, so I don't think that is a big issue. But yes, the cash flows are not high. Increased competition. All the companies are looking to enter these payment gateways services. For example, Amazon has Amazon Pay. Then Facebook is trying to enter through, with the partnership with Jio, is through entering through WhatsApp, and WhatsApp Pay is also going to come. So there is a lot of competition in this space. Then the fourth point is this increased competition is a big issue in this company, and I think because of that, the money which is being put up into this is a bit risky to put, because there is a lot of competition in this industry. This is company is based too much on the future, so they are valuing too much of their work based on the future, because the industry is banking on the future that things will happen. But right now, for this to happen, the firm needs to put out some policies which will help it to grow, and you never know what's going to happen. So I think this is a con, because they are based on too much in the future, like what will happen in the future. They are based a lot on that. Then the fifth one is that investors based out of China. So the government is obviously supporting, but the relations between India and China are volatile, and they have SoftBank, they have Alibaba, who have invested in the firm, and they might the government's relation with the Chinese government might be con for this company, and it is disadvantageous for the firm. But yes, on other hand, the government is also supporting the company, so we shouldn't count this as a big disadvantage. And then the UPI transactions, which I wanted to point out. June 2021. 46% for from PhonePe, 35% from Google Pay, and that number for Paytm was only 11% in June 2021. So that is a low number, and the company, if they want to disrupt this company, this industry, they need to bring this number higher, and they need to be more competitive with other UPI platforms which are providing the UPI transactions. So now finally, let's look at what should be done. So the right now the right now the government is also supporting this company, and there are a lot of advantages, but they are banking a lot on the future. So the company is seeking a valuation of around 30 to 35 billion dollars, and the gray market price right now is around 3000. So it is expected that the IPO is going to list above 3000 rupees. That is a good gain at listing. So if the price is 2150 and if it is going to list at 3000, so you are getting a profit of around 900 rupees. So I would say yes, for the listing gains you can apply, but right now I think the company is loss making and they aren't doing pretty good. The same way Zomato was a loss making, and after listing the company hasn't done a lot. So my view is, for long term, I would wait and not invest right now. I would wait for the price. I personally don't want to invest till above 2000 rupees share price. So I would want the share price to come to that level, and if it doesn't, then I don't think I'll be applying and for the long term. But yes, if you want to apply for the listing gains, it is a good opportunity, and all these views are my own. Do consult your financial advisors before making any decision. And this was the whole analysis. I hope you liked the analysis, and if you also want to read the prospectus, you can go on the SEBI website and read the prospectus if you want. And the main pointers I've told you from that prospectus in this video. I hope you like the work which I've done in this video, and I hope you like the video. Do subscribe to the channel, and I hope to see you in the upcoming IPOs, and I will be making some more videos on the upcoming IPOs. See you soon. Bye bye. Take care.